Good morning, everyone, and welcome to Ask the Expert. Ask the Expert is an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses just like you. If you have any questions, then please do ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and experts just like myself are on hand 24/7. During the session, we'll be running a poll, so please do engage, and I'll reveal the results at the end. Okay, so who am I? Well, my name is Aaron Patrick. It's an absolute pleasure to be with you again. I'm a chartered accountant and also a QuickBooks certified trainer with a fancy new logo. So if you don't be afraid to ask any QuickBooks related questions during today's session. I also own a state-of-the-art accounting firm called Boffix, which uses the best in cloud technology available to help small businesses get the crucial real-time information they need at their fingertips. If you require accounting advice, payroll, bookkeeping services, and even QuickBooks training, then please do get in touch. We don't want small businesses to survive, but to thrive. I also have a dedicated QuickBooks YouTube channel called Aaron Patrick, the QuickBooks Chap. So if you need any of the advice on QuickBooks with news, advice, or anything like that, then please do go over and give the channel a follow. Okay, enough about me, and let's focus on today's session. As always, that session is all about you and your burning questions. So please use that question box or use the social channels to get in touch. So while we wait for the first of the questions to arrive, let's talk about today's topic. And of course, it's going to be self-assessment. Any accountant you know will be talking about self-assessment at this point in time. Basically, the TDLR is we have a week to go. And we have had the breaking news that the extension itself has been extended to February, but please heed the warning that it might not be financially beneficial to you to leave it till February, and more on that in a minute. You see, the self-employed usually need to do a self-assessment tax return and pay their tax bill each and every year. The term self-employed can be a freelancer all the way to, say, a YouTuber. Basically, if you earn money outside of pay slips, then which isn't tax at source, then this is going to be something you need to be worried about. Maybe this is your first year, or maybe this is a year where it's been even more difficult than ever to get it in by that 31st of January. So let's go through and break down what you need to know. First of all, you need to submit your tax return by the 31st of January. Whether you're a sole trader in a business partnership or run a limited company, you file a return for the previous tax year. So if you think about it, that's from 2020 to 2021, which covers April the 6th, 2020, all the way to the 5th of April 2021. The deadline for filing your return online and paying your bill is the 31st of January 2022. The self-assessment process can be complicated at first, so today let's talk about it in its most simple terms as we possibly can. So first of all, self-assessment, what actually is it? Well, self-assessment is the tax return process for self-employed people. Whereas HMRC collects income tax from employees directly through the PAYE system, so if you have pay slips, you don't need to worry about being self-assessment or doing a tax return. But the self-employed people need to work out their income and expenses and then pay their bill each and every January. If you think about it, HMRC don't know how much you've earned in a given tax year. You might even need to complete a self-assessment tax return if you're not self-employed. For example, if you earn money from renting out a property. You'll also need to complete a tax return if you have a significant income from savings, investment, and dividends. So, do you need to do a tax return in the first place? Well, HMRC says that you need to send a tax return and pay your bill through self-assessment in the last tax year. You were one of the following: a self-employed sole trader earning more than £1,000, and that's earning, that's the top figure there, not the profit. A partner in a business or partnership. You're classed as self-employed if you run your business yourself and are responsible for its success and failure. And HMRC also say that you might need to send a return if you have untaxed income from renting out a property. Saving, investment, dividends, and foreign income, etc., etc. Pro tip, HMRC have a special tool online which will go through with you and ask you questions to see if you do need a self-assessment tax return, and promise you it's absolutely brilliant. But the key thing there, though, you may not even realize you need to do a self-assessment. If you're taking income, for example, from YouTube or from Twitch or from any of those social platforms, you may not realize about that £1,000 threshold. If you earn more than that in a particular year, then unfortunately you have a requirement to do a tax return. So do keep on top of it and make sure you don't fall foul of those. How to do a self-employed tax return? Well, let's look at it in step by step and what you need to do. Well, throughout the criteria you need to do a tax return, let's follow these simple steps. First of all, you need to make sure you register for self-assessment. You have to register for HMRC for self-assessment by the 5th of October if your business second tax year. HMRC might fine you if you don't register by this deadline. So 5th of October is the big date that you should have been registered for. To register for self-assessment, visit gov.uk registration page and submit your details. Registering for self-assessment should give you a government gateway user ID. Keep hold of that ID, which you can then use to set up your personal tax account. When you log in, you can manage different elements of the taxes online. Once you're registered for self-assessment, you're then able to file your tax return on paper, but HMRC will eventually phase out paper completely when we go to making tax digital. And honestly, getting it online is going to be much more beneficial for you. And at this late stage, you only have the option of filing online. So how do you gather your tax return information? Well, for self-employed, the key information is likely to be income and expenditure details. So you should have all your invoices and receipts to hand. There are costs you can deduct from your turnover to work out your total taxable profit. You can claim for things like office, travel, marketing, items like that, and business insurance costs, as long as you're used solely for the business. It's important to keep records throughout the year and really highly recommend using something like QuickBooks Online to keep on top of that. More on that in a moment. Not only does that make filing in the return easier, but HMRC may check your return after you filed and ask to see your records. So the better records you keep, the easier you're going to be to stay compliant. You're required to keep your records for 5 years after the 31st of January deadline. You likely need to see details of employment income if you're also employed. So if you do receive those pay slips and have been taxed on them, you still need to declare them on your personal tax return. You may need to talk about dividends or show dividends, partnership income, interest, rental income, foreign income, pension contributions, gift aid, pension income, payment on account, redundancy, P11D, or capital gains. And if you fall into any of those criteria, you need to be including each and every one of those elements on your tax return. If you need to ask third parties like banks and building societies for information, make sure you leave that long enough for them time to give you. In this late stage, though, estimates might be your best option just to put them in and maybe do an amendment later down the line, just so you hit that 31st of January deadline. You also need to have a unique tax reference number. So you should have had that when you register for HMRC, and we talk about that as your UTR number. If you need any help with records and filing, you might want to consider hiring an accountant. People like myself are available even at this late stage to get things done. Also, keep in mind you can use accounting software to help you keep your records. And I promise you, if you use accounting records, you're going to make your life so much easier for filling in not only this tax return, but more importantly, tax returns going forward, especially with this move over to MTD, Making Tax Digital. So filling in your self-assessment tax return. If you're filing a paper return, you'll need to update the SA100 and the self-employed supplement form SA103. But filing online gives you a much more of an option for you. You get 3 months extra submit. And again, you only have that option for this 31st of January. And it's quick, easy, secure, and its systems reacts to the details you enter. So if you tell them that you are self-employed, that SA103 that we spoke about, that's automatically going to be included for you. And you get reminders to find information if you get stuck. You'll need to register if you haven't filed online, but want to do so from now. HMRC will send an activation code by post, and this could take 10 days. So even if you register today, you may be struggling to hit that deadline, but normally if you register today, HMRC will give you a small extra extension anyway. But I do recommend you could give yourself plenty of time to sign up, and HMRC recommends 20 days from registering to be able to get that activation code. If you're filing online, then you've gathered all the information. Here's what you need to be logged in. Here's what you're going to need when you're logged in. You're going to need to check your personal details. HMRC should be kept up to date with changes of address or name, for example, and you need to check them when you're doing your self-assessment process. You need to fill in the sections that apply to you, and you need to report on what you've earned. So remember, even though that they already know about your pay slips, for example, if you have employment elsewhere, you still need to report against that. And basically you need to match up to what HMRC has been told to what you record. You get to add your tax deductible expenses, and then finally you get a option at the very end before filing of double checking your tax return. And if you need to, you can save everything you've entered and come back to the return at a later date. And it's useful to check your return, check your numbers, but if you notice a mistake, it's possible to change your tax return after filing. What I highly recommend to do is once you've done that first initial tax return, shut it down, come back to it in say 24 hours time, have that fresh eyes, have that fresh option. And that's always a really good sense check before you press that submit button. Pay your self-employed tax. Well, when you submit, you should get a confirmation message and a reference number. HMRC will calculate the tax you owe, and well as any national insurance contribution you may need to pay, and maybe sometimes student loan as well. The deadline for paying your tax return is the same date as the deadline for filing, so 31st of January. And that 31st of January is still the deadline, even though we've had an extension for filing. So again, if you are someone who you think is going to owe money to HMRC, then it might not be making financial sense to wait until end of February to file your tax return, because technically the amount due is still due on the 31st of January, and HMRC have already said that they will be fine. There will be late payment surcharges against anything that's not been paid by the 31st of January. So even if you want to utilize that 28th of February extension, then bear in mind that that could lead to a higher tax bill overall. If you file your tax return late, you'll get a £100 penalty. And if it's up to 3 months late, it's even more than that. That being said, HMRC have said that applied penalties has changed to a point-based system from next year. So we're going to have a whole new way of dealing with actual how much you need to pay from a tax return point of view. Now, it's not all doom and gloom. If you need help, if you're struggling to pay self-assessment tax, which is normally the reason people haven't filed by this point, that whole mentality of burying your head in the sand, well, don't worry about it too much, because HMRC's time to pay service is available if you can't pay your tax bill by the 31st of January deadline. This is those who are struggling financially, so people hit by COVID, for example. And if you can pay your tax bill, you should, not least because though the time to pay will add interest you owe, well, this makes your tax bill more expensive. You'll need to complete your tax return first. So if you are utilizing any of those payment options from HMRC, then you need to have the tax return in beforehand so HMRC can see how much you actually owe and what position you're at. So don't leave it until the last minute. And if you miss the tax deadline for either filing your return or paying your bill, HMRC may give you a fine, and they may even refuse you access to that whole having the ability to pay chunk by chunk. You can also call HMRC's payment deadline helpline, and they'll talk you through all your options you have when going for that. We've got lots of guidance on helping paying for your PAYE, paying for your self-assessment, and also keeping on top of saving for your self-assessment on a real-time basis as well. And that's over on my Boffix YouTube channel. So have a look at the Boffix YouTube channel for more details on that. But really, one of the big things that you should be learning about all this is that's a lot of information that you're going to be required to submit to HMRC. So please do yourself a favor, use software like QuickBooks Online, because QuickBooks Online is designed to make it super simple and super straightforward to record your information on a day-by-day real-time information basis. That whole idea of connecting your bank account, getting all that data already into QuickBooks Online for you. And at the very end of a tax year, just like we've got here, you can press one button. It's going to show you exactly what needs to be completed on that tax return going forward. And with MTD around the corner, that's making tax digital, everything's going to be changing in the next couple of years. So you're going to be forced to use some form of software. So why not start now? Why not get yourself in the best possible mind frame in terms of getting yourself ready for your tax return, not leaving it to the last minute, doing it in real time and using software like QuickBooks Online. Promise you, all the clients that we act for, the ones that are using cloud-based solution, QuickBooks Online, are the ones that are actually in a much better position at this point in time, because they know what to expect when they file their tax return. It's not a waiting game for them. They're not waiting and worrying about what that final tax bill is going to be. So please don't bury your head. Get your return filed in on time. Again, we have until February, but for most people out there, you're better off getting it into January, just so that tax bill is as low as possible. There's no extra penalties or interest or anything else that goes on top. Right, I know that was a lot to take in, and I know I've gone a little bit over time on that one. So let's go to the favorite part of the show, definitely for me, and that is about talking about your questions. So I noticed a couple of questions have come through now. And remember, if you have any burning questions, then please do use that comment section to ask any questions so that we can get your questions answered. At the end of the day, get yourself involved. So the first question came from James on Facebook comments. And it's a QuickBooks related question, which we absolutely love here. So good morning. I have a question, please. On QuickBooks, how do you record a CIS refund, please? There's no feature for this and all the features seem to be a workaround. So this is a really good question here from James. And basically what we're saying here is QuickBooks Online has a great CIS functionality. It's been designed from the ground up to help you freelancers or CIS users. And it's not just for people who suffer CIS, but also for people who have to deduct CIS as well. And the features within CIS is all designed to make things nice and easy for you. And the idea is that you don't have to worry too much necessarily about the tax side of things. You just need to be recording what work you're doing, and the CIS will be worked out in the background, including the whole reverse charge for VAT if you're VAT registered, and keeps all of that stuff nice and straightforward for you. We also have the opportunity in QuickBooks Online to actually file all the information to HMRC regarding your CIS as well. So QuickBooks Online will deal with the submissions to HMRC, and it'll also keep you nice and compliant while making it nice and easy for you to understand how much CIS you actually have. And this is great, and this works really well. But as James says here, there's certain features within the CIS which aren't as straightforward as the rest of the software. Again, the rest of the software makes it so easy to be CIS registered, whereas these elements like this, where you've actually received your refund and you need to allocate that refund correctly, there isn't any kind of magic wand or any special solution within the software to make that really, really easy for you. Unfortunately, that comes down to just prime records and prime record bookkeeping within QuickBooks Online. So when it comes to recording a CIS refund, well, you need to put that CIS refund against the actual balance sheet item that you've got within QuickBooks Online to say that you've received that income that you've been collecting, or you've received the money that's been deducted against you. Now, the best way for you to find out where to post that to is go to your report section, and under reports, you can run what's called a trial balance. And a trial balance is basically going to show you all of the transactions that you've had in QuickBooks Online and what categories they've all fallen under. Now, what you're going to be looking for is your CIS control accounts within there. If you're using QuickBooks CIS, they're really nicely laid out. So it'll either be CIS withheld, or in this case, CIS suffered. And it's going to have the opportunity there for you to see one figure, and you should be able to see basically how much has been collected, or in your case, been suffered within this particular period. And then all you do is when you receive that refund into your bank account, you're going to go into that bank account transaction, you're going to go into category, and you're going to select whichever balance sheet item, whichever category was shown on that trial balance. Pro tip, have two screens open, and then you can see on both sides exactly where that's going to hit, exactly where that transaction is on your bank account. And then when you press post on that transaction, you should see that whatever that balance was within your CIS control account, that should then reduce, signifying that you've received an element of that CIS already. I know it's a bit complicated, but if you need any more advice on that, head over to my YouTube channel. I've done a whole video on CIS. And at the very end of there, we talk about how to record your refunds from there. So it does seem like a workaround, but I promise you, once you've done it once or twice, you're going to make it really, really straightforward yourself, and even make it easy on yourself. Set a rule in place so that next time that refund hits, that goes directly into your CIS account. Good luck with that, James. Any other questions on that, do reach out to me. Or again, do go and look at that video. Maybe stick a comment on it if you're still struggling, and we can answer it that way. Zoe on Twitter DM asks the following. This is my third time doing self-assessment, and I made mistakes. The last 2 times and was fine. I'm pretty scared of getting into trouble. If I spot a mistake after I've submitted it, how do I correct it? Well, first and foremost, Zoe, well done for actually noticing the mistakes in the first place. Well done for actually seeing that there is problems there. Most people, they don't get that opportunity or don't recognize they've made a mistake, and they're in even more trouble when it actually appears, because it becomes as a bit of a shock to them and everything else. So first of all, congratulations on spotting that, and well done for looking at that one. Now, basically what you've got to do in this point of what you've got to do is sign in back into that self-assessment portal. So, remember at the top of the show, we were talking all about your online portal and how having that government user ID was really, really important. Well, you're going to have the opportunity to go back into that account. You're going to be able to see what you've already returned. And there is actually at the very bottom of that page, the option for view amended return. Once you press view amended return, that's going to give you the opportunity to go in there. You can make whatever amendments you need to, and then you can submit that at that point as well. Highly recommend you submit as soon as possible before HMRC notice you made a mistake and maybe create an inquiry or anything like that. But if you get that submitted as soon as possible, we're not at the 31st of January at the moment, so you've still got time to get that through. So technically, you should be able to go in there, make your amendments, and get them submitted before the deadline. Promise you, once you've got that done, once you've seen it the first time round, you'll see it's exactly the same as when you submitted your return in the first place. It is just a case of amending that return, maybe taking off some of the submissions, amending the submission, whatever it is you need to do. You'll be able to go there and get that done nice and straightforward. So good luck on that one. Sonia on Facebook Messenger asks the following: I'm usually quite good at making sure I save money to pay my tax bill, but unfortunately that pot got eaten away as I had to close for over 2 months due to COVID. Really sorry to hear that one there, Sonia. I don't have enough money to pay this year. What should I do? Well, first of all, as I said in the beginning of this thing at the top of the show, most important thing is to make sure you've submitted your tax return in on time. Even if you're struggling to make payment on it without actually submitting your tax return, HMRC don't know how much you actually owe and can't offer any assistance. Once you have got that submitted, then please go over to HMRC themselves. They have a whole dedicated phone number for helping to pay self-assessment and getting that payment done in on time. And I would just give HMRC a call. What they're going to do is ask you some questions about your circumstance at the moment, understand exactly why you weren't able to make payment. The fact that you've had COVID for 2 months is going to be a very good likely factor, and it's probably going to be all you need to do to prove to them. But they need to just assess your personal circumstances at this point of view, and then basically they will give you an offer with HMRC's time to pay service. And that offer, normally, in touch wood and hoping to kind of what's happened, but definitely from our client's point of view that we've been acting for, that offer has been very generous at this point in time and has helped a lot of our clients get through the worst of it. So fingers crossed, Sonia, they're going to be exactly the same with you, give you that flexibility, give you that opportunity to make payment and make due on your payments so that you can make sure that going forward, you're not going to have this big looming liability over your head. The other thing to remember, though, is just to start thinking about planning for next year's tax bill as well. I know it's difficult. I know it's not the thing to listen to or hear about at this point in time, but you don't want to be in the same position this time next year, because you'll just be in a really, really tricky situation. So highly recommend that you start really looking at your cash flow at this point in time, find ways to aggressively save for that tax bill as best you possibly can. And hopefully then this time next year, you're not going to be in the same position and you're going to be in a better opportunity to get yourself going forward. Dave on Instagram, good luck with that, Sonia. And again, if you have any questions or any further issues, do reach out to me, no problem whatsoever. Dave on Instagram DM asks the following: Hey Aaron, what was the biggest learning in 2021? For me, it's the continued focus on flexibility with my team. We've got to help pull everyone through that's been thrown our way in the last 12 months. And Dave, I couldn't agree anymore. If anything, what we've learned is that 2021 was actually a trickier year than 2020. And as crazy as that sounds, 2020 was the year of uncertainty and the year of real kind of restrictiveness, and we had real punishing lockdowns. But actually 2021 seems to be the knock-on effect of that, and that has been something that's really struggled with in terms of keeping not only our clients motivated and keeping them up to date and keeping them on the straight and narrow, but also for our own personal businesses as well. And we're all struggling, I think, at the moment. I think this has been a really tough time, and I think it's something that we really need to find ways to get through. One of the biggest learnings I've taken from this year, though, has been the fact that actually real-time information is by far the most important element that we can bring to any type of business. I've been fouled of myself and not keeping up to date with my own personal business vendettas with trying to focus too much on clients. And that means that I've sometimes struggled to be able to keep on top of the key business decisions we've needed to make. So even if I'm struggling as an accountant who preaches about real-time information on a regular basis, then I know that it's really difficult for you out there as small businesses as well. But don't forget that software like QuickBooks Online is designed to make your life easier. Utilize those opportunities, utilize the software, utilize the AI that's built in, utilize every single element of it. That's why I started the YouTube channel for QuickBooks. It's designed to help you get the most out of QuickBooks Online. So Aaron Patrick, the QuickBooks Chap on YouTube, is all about finding those little nuggets that's going to help you get the most out of QuickBooks. And as much as possible, you want to automate as much as you possibly can, so that when you do log into QuickBooks to do a quick 5-minute job, you've also been presented with data that's going to be important to your business. And that's been an absolute lifesaver for me, and has been able to make sure that when I'm on top of it and I have everything up to date, I've been able to make those crucial business decisions with actual real data. I'm not having to guess. I'm not having to worry about it. I'm not having to be, trying to figure out what I need to do at what point. I've got real data that's going to let me know exactly what my options are when it comes to those crucial data. Maybe it's having to hire, or maybe having to let go of someone. When you're making those real big decisions, you need that information there. And I think 2021, more than anything else, has proven how crucial that information is. And it's something that we really do push when it comes to QuickBooks Online. And here at Boffix, it's something that we wouldn't be able to continue without. And I think basically, once you've kind of gone through the worst of it and you've seen how crucial that information is, then your mindset is always about trying to keep on top of that data so that you can utilize it going forward. That's a great question there, Dave. And hopefully for you, you've been able to get through it as well. And hopefully, fingers crossed, we can see a brighter 2022. Last question, I think, here. So Chloe on Facebook Messenger asks the following: I work on a full-time job and run a company outside of work. I barely take any wage from my company, like a couple of £100 a month, but I still need to do my self-assessment. How do I put two income streams together? Great question there, Chloe. And this is one of those ones where a lot of people kind of almost forget about their requirement of doing a self-assessment and their requirement for HMRC's purposes. But basically, if you think about it from HMRC's point of view, the only reason that you're even asked to do a tax return is because they don't know anything outside of that full-time job. That full-time job, they're already fully aware of. They know every penny you've earned thanks to a solution called real-time information, which real-time information on PAYE and payroll makes HMRC's life so much easier, because they know how much you've earned to date. They know what you've taken and what tax you've been taken away. But obviously, they don't have that information from anything outside of PAYE, because they don't know until you submit your self-assessment. So that self-assessment is designed to basically look at everything you've earned in a tax year. So that money that you've earned from your full-time role, well, that's going to be straightforward. You'll get your P60 or your last pay slip, or maybe your P45, and you'll put that in the relevant section on the self-assessment. Then all you need to do is take the information you received from your other company, either as a self-employed, or in this case, it sounds like you've got a bit of a limited company there. So you're just going to say what wages you've taken out of there. Now, that could be actual physical salary. So again, that's going to go on that salary page, or it could be in a form of dividends, and that will go on the investment page as well. Now, there's lots and lots of complications and extra elements to doing a self-assessment. And a lot of people, their fear of putting that onto their self-assessment or to do a tax return is because their fear of finding out what a tax bill could be, especially if you're only just kind of surviving on the money you've taken out. But the beauty of tax return is, because of the complication, there's also actually sometimes some real benefits out there, and there could be some real opportunities for you to utilize. For example, if you are taking dividends, you may not be aware that you get a dividend allowance, which means that when you actually put that tax return together, you may find that you have no additional taxes to pay. Or you may even be in a position where you have a refund available because of the way that your current or your PAYE job's been taxed. So please get that tax return together as soon as possible. Get it in at least at draft as soon as you possibly can. So as soon as that March, April comes around, just get it onto whatever software you're using, or using the HMRC portal. Get that information in there, see what that tax bill is going to be, and then work on it during the year by putting any kind of other bits of information. Once you start kind of working with it and seeing it that first time, understanding what's kind of the requirements of doing a self-assessment, and got over that first year, you'll be in a much better position going forward. And I think for you, your kind of calculations going forward and trying to get together what's going to be best for you, well, again, once you've done that first year, you'll see how they interact with one another. You'll see what allowances you're going to get from your different income streams. That's going to help you plan for the future, and you're going to be in a much better position. So use that real-time information as best you possibly can. Use the data you're going to get from this first tax return you're going to do, and I promise you'll be in a much better position. But Chloe, if you want any more questions on that or advice on that, then do reach out. And we do have a video on our YouTube channel about secondary income and how best to deal with it, how best to report on it, and also how best to save for it from a tax point of view as well. So maybe give that video a watch. And that's it. That is the end of today's session. So if you remember, we asked you a poll to talk about, and we asked, have you submitted your self-assessment tax return already? Hopefully this is 100% yes. But unfortunately, 33% of you out there have said yes, while the rest of you have said no. And 0% have said that you're working on it at the moment in time. Promise you at this point in time, we've only got 7 days to go. Really, ideally, you should at least be working on it by now, have some sort of draft figures ready to go, and don't, use that software, or use that online portal. The fact you can go back to at any point means that get that up to date. Always just start that tax return from day one, put information you know about straight away onto it as much as you can. And that's going to give you a better step forward going forward. Going to mean you're going to be able to hit those deadlines. But yeah, we've only got 7 days to go. Technically, I know we've got an extension, but again, financially, you might be better off making sure you file before the 31st of January. So please, please, please use this, heed this as warning. Go back on this. This video will be on demand if you want to go back through and look at any kind of tips and tricks we've just gone through and kind of going through from there. Please use this video as reference, but get that tax return in on time. Thank you all for tuning in this morning. If you want to get in contact with me, then please do send a message to me on hello@Boffix, or again, go subscribe to the YouTube channel, Aaron Patrick QuickBooks Chap, and go and put comments on there. I'm always reading comments on there. I'm always replying to them. That could be the best way to get your information or your question answered. Coming up on Ask the Expert tomorrow is the CBT therapist and director of Compass Therapy, Helen McGiverley, and she's been on loads of times before, and she's brilliant. This is also going to be the perfect time for her. We're all feeling at the moment, we're all kind of stressed with that deadline. So this could be an absolute perfect guest. Tune in to get advice on how to stay grounded and mindful during a stressful tax season. I'm definitely going to be signing in and getting some tips and tricks, because at the end of the day, if we can get ourselves on the straight and narrow, we're going to be able to look after our clients in a much better position. A reminder that if you need any more advice, then join the official Intuit QuickBooks SMB community group on Facebook. Accountant and business expert just like myself are on hand 24/7. I've really enjoyed answering your questions today. Have a fantastic day, and I'm sure I'm going to see you in the next video. Bye for now.